Hello everyone, welcome back. Got a good one for you today. So in today's video I want to talk about just prices. There's this really common misconception in the mainstream and just among amateur investors that up is good and down equals bad. I'm here to dispel that. Prices are just prices. So if going back to my predictions video, when I talk about stock prices moving higher, if you think for a second that means I'm saying there's no recession going on in the real Main Street economy, you're wrong. Prices are just prices. Up in this case equals bad. It's a dollar collapse. Study Weimar, Germany. Study Argentina. Study Venezuela. You know, Venezuela's stock market, when everyone was starving, crashed straight up so badly they had to reverse split it 10,000 to 1. So basically they had to divide their stock market by 10,000 to reset everything, and then it just hyperinflated right back. And if you want to be like, oh, well, if you look at that chart, everybody's getting rich. No, they're all starving. So this whole notion that, you know, up is good, like when you're reading the mainstream and they're like, oh, stock's off to a really strong start, it's like, no, you're just watching a currency collapse. And then when they're saying right now in the mainstream, oh, there's about to be a recession, what, in asset prices? Because there's already a recession in growth. If you go off GDP growth, we've been sub 3 through Obama's presidency and Trump's. There was maybe one quarter during Trump's presidency where we had above 3% GDP growth, but it was like one little fleeting thing, and that wasn't even so much Trump's engendering of confidence in business, although, you know, he had a hand in that, and he did. But it was just the Fed and the Treasury keeping interest rates on the dollar at zero for like 10 years, you know what I mean? Destroying the currency. So what you're seeing right now in markets is a bit of a psyop with regard to how they're spinning everything in the news. Because, like, let's say tomorrow the NASDAQ goes up, 3%, or the Dow Jones goes up 2%, or gold goes up 2%. You're not watching like strong fundamental developments swoop in and save the day and save the economy like they're going to have you believe. You're watching the dollar get weaker, and you're watching more and more and more weaker dollars chasing a fixed amount of assets and, valuable stuff that people are trying to hoard because they don't want to sit in the currency. Does that make sense? So just because I might be saying, oh, I think real estate prices are going to continue moving up, or I think gold's going to keep going up, or I think Bitcoin's going to keep going up, that doesn't mean, ergo, everything's good. If anything, these asset classes should be half the price or a lot cheaper. I'm saying you're not going to get that from fixed markets, from not having free markets and flexible prices. You're going to see the B system, the 401ks, the Ponzi get protected. So I just wanted to clarify that because I think it trips people up. And I also think there's an incentive for the media to trip people up with ideas like that. So they're kind of trying to keep you off balanced and confused, or they just don't really know what they're talking about. Perfect example would be crude oil right now. Okay, that's an asset class. Look how expensive it is. Tell me what that's doing for our economy in terms of real growth. It's actually destroying it. So when I see asset classes ripping higher, that doesn't mean I'm saying the economy's great, we're also growing. You gotta divorce those and get that out of your head. Prices are just prices, and markets just trade on expectations. That's it. So if the market has a feeling that the dollar is about to get a lot stronger, which I think would be a massive boon for the real economy and 99% of us, that also means asset prices are going to fall. So I guess what I'm saying is, if you want a stronger dollar, if you want to fix your inflation problem, if you want to fix your supply chains, you might have to do so at the expense of asset prices and the overinflated, arguably, beast system that's, transferring 30% of the nation's wealth into their coffers through inflation. So kind of get a handle on that. In this scenario, and in the context of a currency collapse, down would be good. So these people out here, these deflationists that are like, no, down is bad, and I'm predicting a crash in the economy. Well, the economy already crashed is what I'm saying. They're saying, well, I'm predicting a crash in the markets. I'm saying that would be a blessing. What makes you think you're going to be so lucky? So you have these weird deflationists out there that are like calling for recession and market crashes. I'm leaning massive recession in the real economy. Been in one since 2020 at least. We could argue even before that. You're just not seeing a recession in asset prices. And not only are you really seeing a recession in asset prices, I'm predicting these asset prices keep going higher and higher and higher. And that's not you getting richer, that's the dollar getting weaker and your future self getting poorer because you're, growing more and more unable to acquire as many of these assets in the future, if that makes sense. So be very careful when civilizations go into all sorts of uncertain and volatile times. That doesn't necessarily mean asset prices crash and things deflate, especially when all your institutions believe that deflation or even disinflation is the boogeyman. They're always going to be chasing their elusive inflation goals that they've set so that they can continue to borrow from the future and draw it into the present. So up does not equal good and down does not equal bad. Prices are just prices, and markets can do all sorts of weird and unpredictable or non-intuitive things regularly, So if I honestly thought that we were going to get real, true economic growth and free markets and flexible prices and a strong middle class back, if I honestly thought all those good things would happen, then I would say we'll see asset prices come down in a recession in the financial sector. But I don't believe that. I believe the asset prices keep going up. I believe the beast system keeps inflating, and not because everything's good, but because things aren't good. So I just kind of wanted to clear that up. I think it's a little weird. That's my perspective on it, but I'm just talking here, but I'm pretty convinced that prices are just prices and you got to really think twice about what you're looking at. Kind of plays off the whole everything bubble theme you're hearing about right now. Well, everything's in a bubble. No, the dollar empire and your arbitrarily good standard of living on planet Earth was the bubble, and that's finally burst. And what that looks like is asset prices across the board get inflated. And that's not because each of these asset prices are doing just so well on their own. It's because the thing pricing all these asset classes is pathological. In the 1930s, we couldn't print infinity dollars. We were on a gold standard. So in the Great Depression of the 1930s that our policymakers, institutions, and older generations are so concerned about, that boogeyman, in the current environment where the Fed and the Treasury and commercial banks can just loan and loan and loan and loan and expand credit into infinity, that's not going to result in deflation. That's going to result in them overdoing it and maybe not hyperinflation. But here, let's talk about that. So when I talk about my predictions in that video the other couple days, like the other day, I wasn't talking about hyperinflation. I mean, it's kind of rough. Hyperinflation, I think textbook is like 50% inflation a month. That's just obscene. So I don't think we're going to see anything like that unless like the whole euro dollar system basically implodes and all those derivatives and digits and laundry tokens make their way back into the domestic economy and start all just chasing this low growth regime and limited amount of goods and services. That could create the environment for hyperinflation. But short of, every other country on planet Earth, which is super dependent on dollar loans, short of them dumping all of their dollar reserves and then they somehow all come back to us, I don't see hyperinflation. I just see it getting harder and harder and harder for anyone to accomplish social upward mobility as these asset prices go up. So there you go. It's not that simple, you know what I mean? A lot of times the market, like sometimes good economic news, oftentimes, especially in the world we're in right now, good economic news actually leads to asset prices coming down. Because if economic news, like in the real economy, is good, that might force the market to believe that the Fed or the Treasury might be less accommodative in their monetary policy. It might make the market start to bake in expectations that the Fed, will start to take away the punch bowl because maybe economic growth in the economy standing on its own means the Fed doesn't need a punch bowl there for the economy to drink out of. And so if the Fed starts to take the punch bowl away and all the fake money because the economy's strong, asset prices fall. And then on the flip side of that, you can have horrible economic news and asset prices just keep going up. And you're like, I thought the economic news is bad. Why is the asset price going up? And it's the market baking in expectations that the Fed or the Treasury or whoever is going to be even more and more accommodative and faster and looser with the fake money policy. So markets are all about expectations, and that's kind of how they trade, and prices are just prices. So if the Dow Jones, crashes up to 50,000, I'm not saying that's a good thing. Like if Bitcoin hits 1 million in the next couple of years, like I'm not saying that's a good thing, because it would imply a currency collapse and, the social order falling apart and your monetary system falling apart. And so just kind of step back and think about how the media is getting at this whole up is good, down is bad paradigm. It's not really how it works. The financial system and the economy are very different. And so, try not to get tripped up. Prices are just prices, okay? Prices are just prices. I think that is a better way to look at it going forward. That way you're not caught off guard if we find ourselves in a situation in a few months from now where things haven't gotten materially better, but asset prices are much higher, and you're going to just be getting so frustrated because you're going to be like, what gives? Like, if everything is so horrible, why is everything keep going up? You just answered your own question, you know what I mean? So be careful with that. Up does not equal good. Down does not necessarily equal bad. Markets trade on expectations. Prices are just prices. The Venezuelan stock market, hyperinflated and horrible consequences, horrible stuff. Argentina went through the same thing. Weimar Germany went through the same thing. Zimbabwe. There's a lot of different countries and history lessons in, what happens when a currency becomes really weak. And once all the monetary energy is being sucked out of an economy, it goes into real assets like real estate. It goes into things that have like a fixed amount like gold and preserve their value. So you can kind of see, don't get tripped up. It's weird, I get it. But, think about these things and it might take your paradigm to the next level in how you approach prices and markets and economics. All right, just a quick video, and until next time.